What if I told you that the money you spend on your morning coffee could one day help pay for your retirement? Sounds a little wild, right? But here's the truth. Investing isn't just for Wall Street experts in fancy suits. A lot of people think that starting to invest means you need a ton of money or a finance degree. That's not true at all. You can begin building real wealth with less money than you spent on your last phone. For example, the iPhone 17 Max starts at $1,199, and the Galaxy S25 Ultra is around $1,299. You could start investing for less than that. Here's what nobody tells you. Dividend investing is literally getting paid to own stocks. In other words, companies hand you cash just for being a shareholder. It's like getting rent checks, but instead of dealing with broken toilets, you're collecting passive income while binge-watching your favorite shows. But wait, before you think this is another get-rich-quick scheme, pump the brakes. This is about financial education that actually works. We're talking about real wealth creation through proven strategies in the stock market that have worked for decades. No crypto gambling, no meme stocks, just solid dividend stocks that pay you consistently. In this video, I'm going to show you exactly how to invest, starting with just $1,000. We'll break down dividend investing so simply that you will need help to mess it up. You'll learn how to build an investment portfolio that generates passive income, moves you toward financial freedom, and sets you on the path to financial independence. I strongly encourage you to watch to the end, because I'm going to show you how this $1,000 can potentially lead to an $8,000 monthly dividend income. So, buckle up, grab your notepad, and let's turn that $1,000 into the foundation of generational wealth. Trust me, your future self will thank you. Before we continue, please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Welcome to Investments Mindset, where wealth builders come to get inspired. Let's dive in. Firstly, let's discuss what makes dividend investing your money's best friend. Picture this. You own a piece of a company, and every quarter, they literally deposit cash into your account. No extra work, no side hustle. Just money showing up like clockwork. That's dividend investing in a nutshell. Here's why this matters. While everyone else is obsessing over whether Tesla goes up or down, dividend investors are collecting checks regardless. Companies that pay consistent dividends, they're usually the boring, stable giants that have been printing money for decades. Think less roller coaster, more escalator to financial freedom. So, here's the big question. Can you really start building wealth with just $1,000? Most people think investing is reserved for the rich, that you need tens of thousands sitting in the bank before it's even worth trying. That's not true. You can start with $1,000 today. The key isn't waiting until you have more money. The key is starting now, and letting that first $1,000 be the spark that changes your financial future forever. Let's break this down with a simple but powerful example. Imagine you start with $1,000 in a stock that pays a 5% dividend yield. The stock trades at $10 per share, so you begin with 100 shares. After your first year, that 5% yield earns you $50 in dividends. Instead of cashing it out, you reinvest it. At $10 per share, that $50 buys you 5 more shares, bringing your total to 105 shares. Now, here's where the magic of compounding kicks in. The following year, your dividends are calculated on a slightly larger base. You're now earning 5% on $1,050, not just $1,000. That gives you $52.50 in dividends, which buys you another 5.25 shares, bringing you to roughly 110.25 shares. Fast forward to year 3. Once again, you're earning dividends on a bigger amount, $1,102.50. That's $55.13 in dividends, enough for another 5.51 shares, taking your total to about 115.76 shares. In just 3 years, your dividend income has quietly grown from $50 to $55, and your share count has increased by nearly 16 shares, without you investing a single extra dollar. That's the quiet power of dividend investing. Small reinvestments that snowball into serious wealth building over time. It starts slow, but like rolling a tiny snowball down a hill, it builds unstoppable momentum. The key isn't speed, it's consistency. Reinvest every dollar, stay patient, and let time do the heavy lifting. And here's the part that really blows people's minds. This same strategy can grow $1,000 into a $340,000 portfolio that pays $4,000 a month in dividends over time, especially if you add just a few dollars a week. That's the path to true financial freedom. Your money working for you, not the other way around. Of course, not every dividend stock is created equal. Some are solid wealth builders, while others are ticking time bombs. That's why knowing how to filter the good from the risky is crucial. And that's precisely what we are doing next. But don't forget that at the end, I will still show you how to reach and exceed an $8,000 monthly dividend income starting with $1,000. Here are the essential factors to consider when selecting a dividend stock. First, dividend yield. That's the percentage of income a stock pays compared to its price. For example, if a stock trades at $100 and pays $4 per year, that's a 4% yield. But beware of anything that looks too good. A 10% or 12% yield might sound exciting, but it can signal a company in trouble. For beginners in investing, a steady 2% to 5% yield is the sweet spot, sustainable and reliable. Next, look at dividend growth, how often the company raises its payout. A company that consistently boosts its dividend year after year is signaling long-term financial strength. Think of it as a silent promise to investors. Then there's share price appreciation, because while dividends give you income, stock growth gives you wealth. The best dividend stocks do both. They pay you now and increase your net worth over time. Also, check for business durability. Ask yourself, will people still need this company's products or services 20 years from now? Utilities, consumer goods, healthcare, and finance tend to pass that test. Flashy trends come and go, but solid, essential businesses keep paying. Finally, look at resilience. Did the company keep paying dividends during recessions or market crashes? If yes, that's a keeper. It means they value their shareholders even when times are tough. For instance, here are examples of 5 strong dividend-paying stocks that are well regarded for their performance metrics and reliability. Number 1 on my list is the Schwab US Dividend Equity ETF, ticker symbol SCHD. A diversified collection of reliable US dividend stocks, offering a 3.75% yield, 10.77% average annual dividend increases over 10 years, and 8.62% yearly price gains. It's an excellent foundation for newcomers seeking built-in diversification. Before we continue, if you find value in this video, even if just a little, please subscribe to help us continue to create top-notch educational content. We appreciate your support. Thank you. Next is Morgan Stanley, ticker symbol MS. Morgan Stanley stands out as a premier financial institution, currently paying 2.5%. Its dividend has surged 22.4% annually for a decade, while shares have climbed 16.98% per year, a compelling blend of income and capital appreciation. Number 3 on my list is the Federal Agricultural Mortgage Corporation, ticker symbol AGM. This firm finances rural America and farmers, delivering a 3.27% yield with an extraordinary 25.27% annual dividend growth and 17.34% price appreciation over 10 years. This agricultural lender offers impressive growth within an essential sector. Number 4 is the National Storage Affiliates, ticker symbol NSA, a self-storage REIT with a 5.5% yield, delivering approximately 13.6% annual dividend growth and steady 4% price appreciation, combining strong income potential with consistent long-term performance. Interparfums, IPAR, rounds out the portfolio as a lesser-known fragrance company, producing strong results. 3.16% yield, 20.21% dividend growth, and 15.51% annual price appreciation. Its under-the-radar status makes it intriguing. To calculate overall portfolio metrics, use weighted averages. With equal 20% allocations across all 5 holdings, average their individual metrics. The yields can be calculated by adding all the yields, that is, 3.75% plus 2.5% plus 3.27% plus 5.5% plus 3.16%, which equals 18.18%, then divided by 5 to get a portfolio yield of 3.6%. Apply identical calculations to other metrics. Dividend growth averages 18.33%, while annual price appreciation averages 12.51%. These combined figures reveal your portfolio's complete performance picture. So here's the big question. What can $1,000 really become if you invest it the right way? Let's find out. Let's say Bobby starts with $1,000 in a solid, dividend-paying portfolio and simply lets it grow. No fancy trading, no constant buying and selling, just smart investing and dividend reinvestment through DRIP, Dividend Reinvestment Plan. In the first year, his portfolio grows to around $1,200, earning about $50 in dividends. It's not life-changing yet, but that's how compounding begins. Slow, steady, and almost invisible. By year 10, that same $1,000 snowballs to roughly $4,800, generating around $240 per year in dividends, enough to cover a few monthly bills without lifting a finger. Fast forward to year 20, and the power of compounding and dividend reinvestment starts flexing its muscles. Bobby's portfolio now sits at approximately $32,000, spinning off around $2,800 a year in passive income, over $230 a month. But by year 30, the results get dramatic. That original $1,000 has exploded into about $350,000, and the portfolio now generates nearly $25,000 every year, more than $2,000 a month, all from an investment that started with just a single grand. That's compounding in action. It starts quietly, then grows like wildfire once time takes over. Now, let's turn it up a notch. What if Bobby doesn't stop at $1,000? What if he commits to adding just $10 every week, about the cost of 1 takeout lunch or 2 cups of coffee? Here's what happens. After 1 year, his portfolio would be worth about $1,700, generating roughly $60 in dividends. By year 10, it grows to nearly $10,000, paying around $500 a year in dividends. By year 20, compounding hits overdrive. The portfolio surges to about $70,000, and annual dividends climb to roughly $6,000, or $500 a month. But by year 30, this consistent $10 a week strategy becomes life-changing. The portfolio rockets to approximately $700,000, and yearly dividends soar past $100,000. That's more than $8,000 a month in passive income. Let that sink in. Starting with $1,000 and just $10 a week could grow into nearly $750,000 over time, all while paying you more than most people's monthly salary. That's not luck. That's discipline, patience, and the unstoppable power of dividend compounding. So, when people say they can't afford to invest, remind them they can't afford not to. If you're serious about building real wealth, then consider this channel as your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth the smart way. Please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Click on the next video on your screen. Thank you, my friend.